Hey, and welcome back to Best of US's Platinum Swing Trading review. This week, we're going to talk about support and resistance levels and how to use them. Mark and Drew are going to take us through a couple different stocks that were traded on the below 200 list, the Horizon list, and the watch list. And Drew's got some amazing questions about allocating assets and taking profits as the stock rises and taking a little bit off the table as you're making money.
So on the
Hey, Drew.
Platinum channel, we have stocks under the 200 SMA list, and this is a little more risky. When you're under the 200, you're tending to be more bearish in your stocks, but there's a lot of opportunity for gains here. And this was a last Friday, okay, and we had again stocks trading below the 200-day SMA are often volatile and prone to sudden price movements, which can result in significant losses if not managed carefully. So today, and again, I don't put these on the watch list. These are just put on lists so that people who have a higher risk tolerance and have a trading plan might be able to make some gains on these. Again, not financial advice, but we've had SBA Communications on here for about 2 weeks. And the chart shows, basically it was under the 200-day SMA and it was constantly riding up. We had support at the 9, we had resistance. You can see we got in when we put it on the list at 231.76, and as of last Friday, it closed at 243.77, or $12.01 a share. Had you had 100 shares of that, you would have been up about $1,200. Okay, which is really cool. Now, what can happen? Okay, is what happened today, and let me show you what happened today. So here is where we put it on the list right here. Okay,
Mm-hmm.
this white line is our cost basis where it went on the list. You can see 1, 2, 3, 4, 5, 6, 7, 8, 9 days up. Okay, and it's following the upper Bollinger Band. It crossed over basically the 50. It's above the 9. Only thing really is it's below the 200. But we're following up the Bollinger Band. We're staying up above the 9. Okay, and you get to Friday, we're kind of moving sideways. We're still in between. We're up quite a bit, $12 a share. And then today you come out and boom, drop down. Okay. Had you stayed in this without a stop loss, and we would have put a stop limit, based on support and resistance. Now the 9s are support, and it shows that in our 200 under the 200-day list that this would be support. And here's your resistance up here at the Bollinger Band plus this where the stops are found up here. Your limit sell limit would have triggered right here at the 9, okay, and you would have triggered at 239.70, somewhere in that range, and you would have saved you would have been up approximately $7.94 a share from your cost base. So you would have been up $794. Now it's not as good as your 1,200 it was on Friday, but again, had you not had a stop loss in there, you would have blown right through your cost basis. You would have been down $561 on 101 just in one day because you didn't put a stop limit in at the support level. Okay, and what happened today? I went and looked it up. Trading Central, whoever that is, put a sell recommendation on this stock today, and the stock went down. Nothing that the charts could ever predict. That's why when you get ahead of a trade, you always want to follow it up, at any point. And then here's your support at the 9. And I always like to use, whatever the support level is to put in my limits, especially when I'm above basically my cost basis in case something like this happens. So this is the difference between, it's going to the moon, and I just saved myself because I'm using technical analysis. So let's, again, that's why we use support and resistance. So here's UEC. Okay, and this is just a uranium energy company. And you're seeing here, okay, you're below the 200, okay, and this would probably get on our below the 200 list. Here's your 9, which is acting as support. We have a full candle close above the 9 here, and you see it just follows along, hits the upper Bollinger Band for resistance, comes back down on support to the 9, goes back up, crosses over, hits the 200, and this is your really hard line resistance. 1, 2, 3, 4, 5, 6, 7, 8 days of resistance. Our support line gets closer and closer. Something has to happen at this point, and at this point, it's squeezed below, and now all of a sudden the 9 is no longer support. The 9 is resistance. You can see what happened all the way down to where we're now bouncing off of the 50 for support. Okay, and the lower Bollinger Band. So that's the importance of these lines. Every one of these lines is a battleground between the bulls and the bears, and I like to use them, to get in and out of positions, along with watching, our oscillators, the MACD, which you can see crossed here negatively, where we crossed over underneath the 9. Same thing with the RSI starting to go down, and the slow stochastic also going down. But these lines can help you make money, or not lose as much money, or not lose money at all if you use them correctly.
Yeah, so I had a question. So I think a lot of people, when they look at your trades, have this question where, you get into a trade and then you sell, right? But in some cases, you sell half. Some cases, you sell 1/4, right? Is there like a standard, or like your threshold level, or how do you kind of make those decisions? Like, you take profit of half, but you keep it, and sometimes it goes up, right? And I'm just curious to hear how you make those decisions.
Sometimes when a stock moves really well out above your cost basis, and you might come up to a resistance level, but you're like, man, all the oscillators are still looking really positive and green, but it's coming up this resistance level, and I'm going to put in I'm up 8%. There was one where we're up 8%. I might say, I'm going to put in, a half of a lot, 50 shares in the way that we paper trade. And I'm going to take that 8% off the table. Okay. But I still have my cost basis. I want to maintain my position just in case it goes higher, because I'm already winning. Okay. Because my price now is above my cost basis. I took half off at 8%. Okay. So if it does come back down, let's say it comes back down and and I put in a stop limit 4% below that for some reason. I just chose that. I'm still making 4% on half my lot. I'm making 8% on the other half. So it's a win-win. Okay. And the reason that you would split a lot, at least in my opinion, is just in case that price action goes higher. Okay. So it's just, you're already taking some off. You're kind of playing with house money. The only way you're going to lose is if you wait, a day, and your price action gaps way down below for some reason, where the price ended at close. So that's a risk you take.
All right, so we're going to wrap it up here. If you have questions, you could go to the Discord. If you're not a member, sign up. We have Premium Plus, which is 20, and the swing trading, which is what Mark and Drew run, and that is 60 a month. We are also going to be integrating that into our new website, which we hope to have up and going by August 1st, which will make it another area where you can see what we're doing and education videos and all that. So please hit the subscribe button and the like button. And we really appreciate you coming out today and watching the video.